A recent study established that 60% of all pensioners did not have sufficient funds to live on. Of these, 64% have had to cut back on their living expenses and 31% has had to carry on working. Now, the retirement industry is heading for a major shake-up, with government reforms firmly focused on simplifying retirement products and bringing down costs. Joining us now to assess the efficacy of pension reform in South Africa is Daniel Akers, CEO of Prescient Life. Daniel, good evening and thank you so much for making the time to join us.
Thank you, Nazi.
Of course, we've been following the retirement industry with all the proposed reforms that are underway. In your view, what are the key issues that have actually led to the initial call for reforms?
Well, I think you stated it quite well in your kind of opening statement. We've realised that there is a problem in the country, that essentially pensioners don't have enough to retire on, and that something really needs to be done about it. There's not a culture of preserving your benefit when you get to retirement, and that's resulting in people taking cash, possibly making poor decisions, spending the money too quickly, paying tax when they needn't pay the tax, and essentially there is a fear of the retirement market. People don't really know what to do, so National Treasury has taken a stance to kind of intervene, and I think it all kind of came around in the first proposals that came through last year. They were heavily based on the proposals that came from the UK, and they have since been refined because obviously they are very different markets.
Of course.
And there's been a lot of interaction between the industry and the regulator, which has been very useful because it's helped to shape the proposals that we see before us today. We had a conference today, which was the Principal Officers Association conference. We were actually discussing some of the reforms that have been proposed. And it was quite interesting to see people taking the first steps, so trustees, principal officers taking the first steps to really understand these proposals and form views on them. And we did see that the views were quite different. The people agreed that there should be, for example, a default annuity product for people coming out of a retirement fund, but they didn't necessarily agree on what that product should be. So I think we have a lot of work to do there.
And it does seem that this process is still going to be quite a while before we see any form of finalization. Do you have any idea or indication when the South African consumer should expect this process to come to an end?
I mean, the initial date that's been given is sometime in 2015. I think that's where they would like the legislation to take effect. As I say, it has been a bit of a consultative process so far. We're expecting some form of first draft legislation to come through this year, which will obviously be subject to consultation. I get the impression that maybe the regulator thinks we're closer to consensus than we might necessarily be. And it is the kind of thing that has to be very carefully thought through. I would rather we have a situation where it only comes through in 5 years' time, but is really kind of effective and suitable to the country than to be rushed through and the consequences not thought through properly.
Even now in the nascent stages, we've heard some dissenting voices, especially from Labour, saying that with the high rate of unemployment that we're seeing, consumers should be able to access their funds. Where would you place this debate and which way do you think it's going to go?
I think it's a very real concern. I mean, the point that they're getting at there is that there is no safety net.
Yeah.
So if people are retrenched, what do they do? I mean, historically, that was the reason that provident funds came into existence, so that people were able to access their benefit in times of need. The National Treasury has tried to strike a balancing act in saying that all your vested rights will be preserved. So any money that you have access to today, you will still have access to going forward, but that new money will be subject to these restrictions. I do think that there's a sense that these proposals are not real yet, and that once they get to the kind of legislation stage, there could be a lot more contention.
And I think that's a really important comparison you make about it being real and unreal. And I'd really want to focus on the realistic situation on the ground. What are the trends that are notable in terms of when and how South Africans are choosing to access their pensions right now?
I mean, historically, just to kind of start there, it's not really fair to say that there's not a savings culture in South Africa, because it really does exist in stokvels in the rural areas, and it is very real. And there's almost a sense of, well, if the system's not broken, don't fix it, but it's not quite doing what we want it to do. So I do think there needs to be a little bit more effort made to reconcile what the current proposals are with what is actually happening on the ground, to make it work for a lot of the market, that really these won't have a large impact on because they are typically the lower income earners. What we have seen is that people typically take cash. They don't tend to invest that cash, and if they do go into annuity products, they take the advice of whichever advisor they come across and are generally biased by the institutions that they're exposed to.
And one of the calls for reform has also been government wanting to broaden the scope of the number of people that actually can come under and get pensions. And obviously this is really targeted, as you've mentioned, low-income earners. How do you think this is going to be accepted by business, having to extend the scope of coverage?
Well, I think it's difficult. I mean, one of the biggest challenges that we're going to face in all of this is the cost of doing it. One of the main aims of the whole exercise was to reduce cost. But obviously, as you start administering smaller and smaller member benefits, it costs you the same kind of amount to administer them. So how is that cost going to be made up? And are we going to see, rather an adverse effect to what we expected to see?
And finally, we also know that government has called on a governance issue, asking for all public retirement funds to come under the governance of the Act. What are the contentious issues there? Well,
I think the main issue when you look at a fund like the GEPF is obviously it's a very big fund, so it's the Government Employees Pension Fund. Moving your assets, changing your allocations, getting these kind of principles and policies in place is quite challenging for a fund of that size. And you have to be careful that you're not making kind of moves and decisions just for the sake of making them, or because policy says you need to. You need a time frame. You need to let people acclimatize to these kind of new proposals.
And I think the question on every consumer's mind really is the uncertainty of the outcome, especially in light of tax implications and what this means for their take-home. Where do you think that element of the debate is likely to go?
I think the National Treasury has been quite generous in terms of the kind of tax incentives that they've given. I mean, they really have tried to incentivize people through tax to save. So if anything, I think people will be quite well off. I think the levelling of the playing field in terms of the different types of retirement funds is quite beneficial. And I think there's almost a hidden agenda to try and get people more financially educated by making them more responsible. We've seen in the US, for example, with the 401k plans, where people essentially manage their own money and are masters of their own destiny, that they have a far greater interest in the stock market and what's going on with inflation and those kind of issues. And if we can achieve that here, with having different kind of tax-efficient savings vehicles, ISAs, retirement annuities, then we should see that individuals are more interested and educated on the market.
One of the points that Treasury has been lauded for in this particular debate has been this drive to unbundle and unmystify, savings and retirement savings in particular. Is there a very strong financial literacy thrust for the ordinary consumer as part and parcel of this process?
I don't think there's enough, to be honest. The idea is there to, as you say, unbundle the products, but and the industry has been guilty. I mean, they haven't been very transparent products. There've been very high costs associated with them, so that's coming to the fore. But how is this education going to happen? It really does need a concerted effort between the regulator, between all the different service providers, and between the funds. And also, the individuals at the end of the day have to accept that defined benefit funds are things of the past and that they are responsible for their own retirement. And that issue is not going to go away. People are living longer, so they need to start having a view and making decisions on their own benefits and actually educating themselves.